What's up, everyone? Welcome back to the Stock Market Summary Series. And if you didn't hear already, markets dropped today. At least some of them did, namely tech stocks. Interestingly, though, we're seeing surprising resilience in the rest of the sectors for the most part. So we're going to get into the markets, what happened, some standout stocks and sectors. We'll touch on the economy, and we'll wrap up with crypto and metals. But before we get into it, do us a quick favor and hit that like button if you enjoy these videos, and click subscribe so you can stay informed. And as always, remember that none of this is buying or selling advice. We're just here to talk about the markets from an educational perspective. Okay, you're here for the no-fluff summary of the markets, so let's get into it. So markets started the day on a pretty tough note. There's that uptick in volume 2, underscoring the sell-off early on.
So what did the numbers look like?
What's truly striking here is just how uneven that hit was. The S&P 500, SPY, ended down about 0.5%, minus 0.54%.
Okay.
And the NASDAQ, QQQ, saw a larger drop of 1.36%.
Ouch. And those big tech heavy hitters like the XLK, the tech sector ETF itself, plunged a full 1.75%.
Ouch.
Clearly dragging the broader market down with it.
So tech certainly bore the brunt of it then.
Yeah.
But here's where it gets interesting. Like you said, the Dow, DIA, it actually managed to eke out a small gain.
Right. A little bit of strength there.
And while the Russell 2000, IWM, slipped 0.77%, I mean, that small cap resilience we mentioned yesterday didn't completely disappear, but it definitely faced more pressure today.
Yeah, it faded a bit. It speaks to maybe a subtle rotation happening below the surface, you know? Looking at specific areas, Tesla, TSLA, that's still on our watch list after its recent breakout setup.
Still watching that one, yeah.
But today's widespread tech weakness is really testing that 50-day moving average. If it breaks, well, that's a key short-term support gone.
Definitely something to keep an eye on.
For sure. And then on the flip side, Energy XLE is tightly consolidating. To a seasoned eye, it's shaping up like a classic bear flag.
Okay, explain that a bit.
Well, it's typically a temporary pause in a downtrend before potentially continuing lower. It's sitting below its key 250 and 20-day moving averages. That usually indicates pretty heavy resistance above. Learning how to spot and trade these setups, I mean, especially understanding the risk involved, that's core to what the Grok Trade Mentorship program teaches.
Gotcha. Good context.
And then you had consumer staples, XLP, actually leading all sectors today. Solid 1% gain.
Oh, interesting. Defensive move.
Could be. And real estate, XLRE, saw a strong rebound, up 1.78%. That's quite a sharp turnaround from yesterday's lag we talked about.
Yeah, big swing there. As always, guys, if you've got a stock you're watching or a question about the markets, drop it in the comments. We might cover it in an upcoming episode. So speaking of the bigger picture, how did today's economic data play into all this market action?
Well, today's economic news gave us some, let's say, mixed signals, especially in housing. U.S. building permits came in slightly above consensus at 1.393 million.
Okay, a little better there.
But housing starts were a bit softer than forecast at 1.321 million.
So conflicting signals.
Exactly. And these kinds of mixed signals just leave investors even more keenly focused on tomorrow's FOMC minutes.
Right, always a big one.
Always a potential market mover, yeah. Everyone's looking for clues about future Fed policy.
And outside of housing, it seemed like a pretty quiet day on other fronts, right?
Yeah.
You know, major Fed speeches or inflation numbers hitting the wires?
Yeah, well, pretty light otherwise, which really left the markets technically driven, as you saw. Traders are still dissecting every little hint for clues on potential September rate cuts.
Right. That theme we've tracked since last week's softer data seems to be sticking around.
Definitely.
All right, let's shift gears then. Let's talk about the more volatile assets. Crypto and metals also saw some significant action today, didn't they?
Oh, they certainly did. Bitcoin, BTC, got quite a shakeup, tumbled 2.71%.
Wow.
And in doing so, it broke decisively below its 50-day moving average.
That floor we mentioned yesterday just gave way then.
Pretty much. That 50-day has often acted as a reliable short-term floor, like you said, where buyers step in. But today, nope, it didn't hold. So now it's testing some key lower support levels. And look, this is exactly where mastering risk management, knowing when to cut losses, protect your capital, truly pays off. It's a massive focus in the Grok Trade Mentorship program.
Crucial skill in volatile markets.
It's absolutely essential. Elsewhere, gold, GLD fell 0.55%, breaking a key support trend line. Interestingly, though, its futures contract, GC, is still holding above its own trend line. Little divergence there.
Interesting interplay.
And silver, SLV, shed almost 2%, 1.97% technically. It's also approaching a support trend line, along with its futures contract, SI.
So crunch time for the bulls there.
You could say that. Bulls will absolutely need to defend these levels, or, we risk seeing further downside. You'll want to watch for those breakout signals we've been tracking. Navigating days like today with this kind of volatility, where key levels are being tested left and right. That's precisely what the Grok Trade Mentorship program is designed for. It offers hands-on coaching. You learn to tackle setups like that XLE bear flag we discussed, or Bitcoin support test here. The focus is always on rock-solid risk management. Plus, there's a commitment to support you until you recoup your investment. It's frankly perfect for mastering these choppy markets and getting the edge you need. It's a serious program that delivers real results.
Good to know. So yeah, today was certainly a volatile session, tech leading the decline, but some surprising resilience elsewhere. Sets up a pretty pivotal week ahead, especially with those FOMC minutes tomorrow. We hope this summary helps you make sense of it all. Wish you a great rest of the day, and we'll catch you in tomorrow's market summary.